Hello traders, hello everyone, my name is Gregor and welcome to our new video surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the Euro, Pound, Aussie, Kiwi, crude oil, and also a very quick look at dollar Mexican peso. Now if you look closely here on the euro dollar, then you can see that we have broken this trend line support over the last few weeks, and the reason for this drop was obviously a strong jobs data, and then also more weakness followed on this pair after the US CPI data came out last week worse than expected. There was also the reports from the UK and Eurozone today. So PMI, manufacturing, especially services, shows an expansion. It means that economy is still doing quite well, and this means that it may not be easy to bring down the inflation. So central banks will have to be still very aggressive, and of course speculators firstly turned towards the US dollar because of the inflation concerns there in the US, and now earlier this morning this trend is also shifting towards euro and the UK when the US is still sleeping. So I think that overall we will still see more US dollar weakness, but possibly maybe later today, or maybe already or maybe tomorrow we expect the dollar could actually resume its weakness. So inflation still, it's a big problem, and I think with this in mind, stocks will have hard times to rally, hard times, not easy to recover, and this could make US dollar even stronger. Now looking here at the euro dollar pair, I think that we are in a corrective phase, and we could retrace, as you know, whenever this 5-wave movement is completed, you can expect that 3-wave drop can resume all the way back to former wave 4 swing support. So this wave 4 is actually of 2 lesser degrees and not 1 lesser degree. The 38.2% is also the first fib level, and usually I'm looking for this to be as important level or minimum retracement level whenever I want to look for potential completion of this pullback. So as long as we are above that level, I'm just aware that something more complex and deeper could be unfolding here, since we are in a corrective phase. Also looking at this technical chart, notice that with this recent reversal weekly candlesticks, we stopped at these upper moving averages, and now I think that this 100 and 200 moving averages can cause a reversal towards the 50 period moving averages on a weekly basis. So that would be the first ideal support, and it comes in around 104.25, quite close to these levels that I mentioned here on this daily chart. Okay, however, maybe something more choppy here could unfold. Wave B could actually be still underway. I'm not really sure if it's already finished here or no. 108 definitely very important resistance. If we see any new jump into that level, then I think that we would still see a reversal lower. So it's not a question of if the euro dollar will retest this 106 level. I just think that the question is of when and from where. I just believe that we are in a corrective phase and that wave C is still yet to come here. Now let's take a look on pound. Now pound had also seen some very aggressive bounce today after services PMI figures came out very strong. So it looks like that Bank of England will have, I mean, Bank of England is somehow dovish, but inflation is still above 10%. So with this data, it will be very hard to bring down the inflation. So maybe there will be bets that Bank of England will be more hawkish going forward, and that's why we have seen a rise here in today's price action. But overall, looking at if we look a little bit back, we are still just chopping around here within this triangle that could be taking place in wave 4. But even if it's a triangle and we hold this 118.39, we are still incomplete here, okay, because triangle is a 5-wave patterns in a sideways consolidation made or labeled by A, B, C, D and E legs, and notice that these waves D and wave E are still missing. Now normally each leg in a triangle can retrace for 61.8% of measured or compared of the same the leg that moved into the same direction. That was wave B. Okay, so I took the distance of this, the 61.8% of this wave B, and measured it from the end of wave C, and this comes in around 123. Okay, and that's also very close to this high here from February 14 when we got these US CPI figures. So definitely very important level, very important resistance, and this of course equals with 108 on the euro, which was also the US CPI high. So I think that there's definitely a very attractive level, but not may not be easy to be broken if we suddenly see more upside from here. But overall, keep in mind that this is a correction, and at some point I think that this market will continue higher, but firstly we need to see a completed wave 4. As I said, triangle is my primary idea, but I'm aware of also of something more complex, like a maybe expanded flat here for a wave C, where prices could actually retest 118 level still. Okay, but looking at the daily chart, I think that major bottom has been formed here. We also retested this 1985 low, and since we reversed quite aggressively higher, I just think that that's another pose within uptrend. Now let's take a look on ASI. Now ASI is also coming to the downside after an ending diagonal here. We have seen a very nice strong push out of this wedge pattern, so it looks like that we are now in a corrective phase. Now sometimes this can be a tricky, and wave B flat correction is definitely on the table here. So if suddenly we rally a little bit more, around 70, it's a new strong psychological resistance level. The major support level would definitely be here at this former wave 4 within this bullish cycle. So 66.30 to 67, that's the key support zone for our next major reversal to the upside, in my opinion. So this could be quite attractive level for longs this year. Okay, but for now we are just still observing and tracking this incomplete corrective decline. Now let's take a look on Kiwi. Now we have a Bank of New Zealand rate decision, which will be out tomorrow. Okay, and as you know, jobs are still low there, so maybe they will be looking for more rate hikes and upcoming meetings. I think that on the next meeting there is a plan for a 50 basis point increase. So I'm looking for potential support or stabilization here on New Zealand, especially because we know that a lot of central banks somehow could be maybe worried because of global inflation is not maybe coming that aggressively down like they firstly thought it will. So maybe that will be also some concerns on for Bank of New Zealand, and that's why we could potentially see some support. Now definitely we are trading at very interesting levels here. If you look at the swing supports here from end of 2022, when we had some choppy price action within these fourth wave corrections, and then when we finally broke much higher, we came back into this very attractive, very interesting level where market found the support at the start of the year, rallied to a new high, but not for a long time. We very quickly reversed and aggressively back to the downside, and that temporary move and break to a new high is usually evidence that this is part of a complex correction. So normally you will see this just thin moves to a new high or to new lows within higher degree correction as a flat or maybe even a running triangle. So here I'm looking for potential flat since we moved very nicely back to this wave area. Of course, there is still room for slightly more weakness back towards this 60-70 area or 6100. But overall, I think that this could be quite attractive for a next very strong push or reversal to the upside. So clearly I'm bullish on Kiwi, and I think that we are just reaching the first supports here. Now let's take a look on crude oil. Now Russia, or Putin I should say, was in the media today, and he highlighted that West is actually the main reason why these Ukraine-Russia tensions are escalating, and actually this kind of tensions could potentially cause some upside on crude oil. However, for now the crude oil is still somehow stable, and maybe it has something to do with this Biden administration, who said last week that they are planning to sell 26 million barrels of crude oil from their reserves. So it's contrarian from since November actually, or December, when they said that they are looking to fill their reserves between $67 and $72. So back then we have seen a very nice recovery, but still not that aggressive to the upside. Okay, but now they are planning to sell. So it will be interesting to see if, despite this latest Putin commentaries, the crude oil could potentially move to the downside. Well, from an Elliott wave perspective, I clearly see this as an ongoing consolidation. It's a triangle in my opinion, and we could see a break to the downside. I'm looking for potential supports here around 62 levels, okay, or $60 per barrel. That's definitely attractive support for this wave 5 of wave A. So overall, I think that we completed this impulsive phase here back in March of 2022, and that you are now in a corrective phase, which sometimes can be a little bit tricky, complex, and not easy to follow. But so far I will try to stick with the simplest view, which means 5 waves down for a wave A towards this support, as I said. Now, if crude oil would suddenly really break to the downside, then this could provide some support to dollar Mexican peso. Now, looking here at the big chart, well, it's still a downtrend, no doubt, but I think that maybe wave 3 here could come potentially to some supports, because notice that market has retraced all the way back towards this February 2020 pandemic low. So clearly that's a very important, a very key level. Some big orders were probably executed down there, and this could impact the price as well. So just don't be surprised if we see a new rally here, especially, as I said, if crude oil would really come to the downside, then this would be positive for the dollar, and Mexican peso could drop versus the US dollar. So that's why I'm aware of this wave 4 rally. But still, as long as we are trading below this September 2020 and that's December 2022 trend line, the trend is still down. Okay, so next bounce could be opportunity to catch some weakness here. And looking at the bigger levels, there's even a chance for a 161.8% extension to be seen after that wave 4. That's also the ideal level here when you look back at the swing support from 2017. Plus, I took the triangle measurements here. If you look or focus on this, let me make this bold. If you look at these projections, well, I actually took the wave A distance, okay, here, and I projected it from a breakout point. And notice that I came out with the target for wave C here around 17, or just slightly below that level, or around that whole area, I should say. So this could be quite attractive for 2023, but as I said, just be aware of this wave 4 pullback. Looking at the 4-hour chart and why I'm tracking, but why I'm aware of potential wave 4 pullback, well, I can count 5 waves down from these December highs. That was wave 1. So that was wave 1. You had a wave 2, very nice extended wave 3, wave 4 flat correction. Now also notice that we have 5 waves down into wave 5, moving into some fib supports here. We are trading at the new lows, and normally when market reaches a new low with 5 waves, we should be aware of a new potential correction. So just be aware that this 3-wave rise could occur before market moves to the downside. But of course, I'm bearish on this market, expecting more weakness, but I'm just aware that these 5 waves down may suggest that this downtrend it's a little bit overextended, and there can be a time for new pullbacks before market falls even deeper. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.